Hey guys, my name's Jonathan Reich. I'm a licensed CPA in the state of Louisiana. I typically help small business owners optimize their processes, get new softwares, find ways to improve workflows, save money, give a little tax advice here and there. All the stuff that a CPA may find themselves doing. Whatever comes across my desk, I'm happy to do it. And I want to welcome everyone to The Digital Merchant. This is a channel for digital marketing, online businesses, strategies, all that stuff without the marketing fluff. Today we're going to be talking about AI bookkeeping, and specifically, how accurate is it? And as someone who's ran across this in a ton of different accounting softwares in the last year or two, I think the jury is still out. And why do I say that? I think it can do a really, really, really good job with the transactional details. Something a bookkeeper would book, invoices, bills, recurring transactions that we know what they're for. It knocks out of the park. And that is probably 90% of small business bookkeeping. Things that can be automated, things that AI can pick up. The reason I say that the jury is still out is because for the technical nuanced things, it can get a little bit more difficult. And that is when you need someone who is a staff accountant or the business owner or a controller or something like that to come in and just kind of keep it on a leash, in my opinion. And I'll give you a good example. And I am going to walk through Digits, who I'm going to be showcasing today. It's here in my background. I'm down in the corner here. Some of the items in a sample company that the Digits AI has picked up, auto-coded stuff like that. But I'll give you an example of one where I have seen a ton of AI accounting software struggle. And it's not the software's fault, and I don't know the way around it because I'm not an AI engineer. But let's say you have $1,000 a month truck payment. The AI can pick it up and say, "Hey, this is price. The bank tech says Chrysler. This is probably the payment on an open liability." So it knows to apply the payment to the open liability, but what about the interest expense associated with that liability? So every time you make a payment on your truck note, your car note, or your house, a portion of it goes to reduce the liability account and a portion of it goes to interest. The AI almost always gets that wrong because it doesn't know what your interest rate is, and it also doesn't know where you might be at on the amortization table whenever you're booking it. It doesn't know that that's the 37th month that you've paid that 6% rate, and so only a small portion of that goes to interest because it's a 48-month termed out loan, something like that. So it can be very nuanced, but for the day to day, I think AI and how the accounting platforms work now, they do a good job. So let's jump in. So let's go over here to the banks and cards here. This is going to basically pull anything within the Digits sample client here for that time period. You can see here there's definitely no shortage and that there's not a lot of transactions coming through the Mercury checking account. But this is how it will look whenever you are using AI to book your bank transactions. Now, we want to take this with a grain of salt. Obviously, this is a sample client. Digits is going to want to make sure that they put their best foot forward, as they should, since, they're trying to show what the software can do. But for instance, here's one that I think it does a really, really good job. Gusto, for instance. Gusto is an external third party. It's a payroll platform provider. Gusto is paying for the salary expense related to Digits. So it's going to book that to a payroll clearing account, and then that payroll clearing account will either book it to salary and wages, employer taxes, stuff like that. Employee benefits, that's going to be healthcare, Digits. So here's a good example. This is why I say you should keep an eye out for things like this, because you just need to review. Let AI do the majority of it, but then let other things percolate up to the top. Digits paying itself $100 a month. Well, we know that's not tax and accounting. Well, it can be depending on how you have it prepped. So this could stay under tax and accounting, and you can see here as I hover, it says accounting and tax preparation fees, or we could modify it and move it to something like software expense. And you can see here every month it's been booked to Digits tax and accounting. So more than likely it's correct. But if you are used to seeing this under something like a software expense, like typically if I'm working out of a client's QuickBooks, for instance, and I see their QuickBooks software subscription come through, I always book that under software because software as a service, billed monthly. It's quite literally in the name, SaaS, software as a service, I book it to software expense. Although if you are a little bit more granular and you want to keep things under like the tax and accounting cost expense GL, you're welcome to. Hartford Insurance, it's pretty self-explanatory. Let's jump into the credit cards. So I feel like credit cards, they're a little bit more off the cuff. Typically engineers or guys out in the field, maybe they're buying stuff. The system may not know what that's for. But let's see what they're able to book using AI. So Amazon, office supplies, that's a pretty good guess. Here's another thing that I run into with AI bookkeeping and how robust is it. If I see Amazon here and it's office supplies, my first thought is $3,287 is a lot for office supplies. Unless, of course, it's a very large office that's taking up multiple floors, for instance. To me, a $3,200 Amazon charge on a credit card, depending on whose card it is, could be something like server spend, for instance. Maybe you're running a software as a service business and you have your Amazon warehouse service costs hitting one of your engineer's credit cards. So that right there, unless you have the ability to use ramp, for instance, I'll talk about that in a second, that can get a little hinky. So office supplies, maybe you can go in and change it though. If you're like, I don't think that really matches, you can just jump in and say, maybe this was hardware expense. It's certainly not office supplies, something like that. However, if you have a good expense policy in place, for instance, the person who swiped their card and used it for Amazon, they can come in here, drop an attachment and say, hey, this was really for $3,200 of toilet paper, paper plates, coffee, stuff like that. That is actual office supplies. And Digits will use that and say, oh yeah, no, that's what that's for. It's definitely office supplies. And that makes it all that much more accurate. All right, so let's go ahead and jump back into some of the other items that were categorized via AI. So Best Buy computers expense, that tracks. They did a good job on that. Apple business applications and software, maybe you're paying for storage with Apple if you're using primarily MacBooks, stuff like that. DoorDash meals, that could be an owner distribution if the business owner said, I don't feel like going out and getting lunch today, but Digits is going to pick it up as meals. But Digits would not know, the AI would not know if that was an owner distribution or not, or part of their comp package, for instance. It's just going to say, hey, I've seen DoorDash before. It's been booked to meals in the past. And that's what a lot of this is. It can be pattern recognition, for instance. So that's neither here nor there. But let me reframe it. A bookkeeper may not know that either. A bookkeeper may say, hey, I've seen DoorDash before. It's a meal service. Let's book it to meals. So just something like that. Like I would say if you have a bookkeeper, it's as accurate as a junior level bookkeeper. I think that's a really great way to say how accurate is AI accounting now. It's as accurate as a junior or slightly experienced bookkeeper, because a bookkeeper may not know, hey, this really is an owner distribution because the owner is pulling money out of his business to get DoorDash because he didn't want to go and pick up groceries that evening. Something like that. Ramp is capable of connecting to Digits, and I really do like Ramp. And why do I like Ramp? I like Ramp because it elevates the accuracy of the platform. And so a lot of times with Ramp, and I don't have a demo client to showcase Ramp, but we do use Ramp for a lot of the clients I work with. Typically, as part of the onboarding and setup process with Ramp, you're required to tag a job, enter a receipt, to describe what the expense is for. Ramp elevates that Amazon card. So you don't end up with things like office supplies for $3,200 from Amazon. Ramp says, give me the receipt and enter what expense this was for. And so if you've got things like Chuck E. Cheese and entertainment, and this is going to be an extreme example, but let's say you took your business out to Chuck E. Cheese and you put it on the Ramp card, but you didn't actually go and play the games at Chuck E. Cheese. Let's just say you ordered pizza. If you upload that receipt and it just says pizza on there and you tag it to meals with clients, there's a good chance that it would come through the Ramp card with meals as clients instead of entertainment. That is a far away example of what may actually occur, but it's an example nonetheless of how AI can pick that up and says, oh, it can read the receipt and say, all I see is food here, no entertainment. Luma, let's just drill into this one. So it was paid on the ramp card. It was $249. We're pretty consistently seeing it. It's going to jump around a little bit depending on use. I do like how it showcases where was it booked in the past, how much. If I click on July, we can see the transactions. It's just, this is a really good plus for digits, but it also shows consistency, because that's one thing I do like about AI categorization. If it's going to be wrong, it's going to be wrong consistently. And so it would be super easy for me to go in and say, oh no, Luma is not business applications and software. Maybe Luma is the name of an apparel company, and I've been buying shirts for my apparel for my employees from this apparel company. It really needs to be under employee overhead or employee uniform cost, something of that nature. You can go in, click one thing, and change it for all the transactions and just do a reclass. You don't have to go in and find each transaction for Luma and then go in and categorize it. It pushes it all forward. The ramp cards really do an excellent job of that, and then Digits does a really good job of playing into that. So overall, guys, I think AI bookkeeping is good enough. You do have those edge cases. I'm not sure how they would ever be solved. For instance, that amortization schedule example. You're going to need someone who looks at that charge and say, oh, this should be split between the liability account and the interest account. It's just, I don't know how you get around that unless you can upload an amortization schedule and tell Digits, hey, keep an eye out for this first, second, third payment, and then it book the interest expense, which very well may be the case one day. But you have to remember, when you sell that asset and that thing stops coming through, hey, we gotta turn that transaction to interest and the liability account off, for instance. But I would say it's good enough. It's about the skill level of a bookkeeper, maybe a junior bookkeeper who's not going to pick up on a lot of those things or ask those questions. But what I do like is the time savings and the savings in labor. So it's good enough. And then if it's not sure on something, it will bring those items to the top for your attention and say, I'm not sure about these. Can you maybe do a double check? That's if it says, I've never seen this before, I'm unfamiliar, or it really could be any of these things. And that right there, the time savings, the removal of the friction in the process, I think is where you get a lot of value, because you don't have a bookkeeper sending you a spreadsheet with 10 items once a week saying, I don't know what these are for, I've never heard of it, I didn't take the time to Google it, I didn't look at the amounts, I didn't look at how it was previously booked. The AI is doing that for you to prevent those emails. So overall, I feel comfortable with it. I don't think it's going to take any accountant's jobs, because it's going to just shift the workload from entering the transactions, which should be automated anyway. And any client that I work with, I always try and automate those, to reviewing, to providing value, to providing insights, to saying, hey, we've got this good data in, it's consistent, how do we act on it? I think that's a really good job for accountants that's where they provide value, essentially. So overall, guys, I'm your digital merchant, helping you trade effort for efficiency. I hope to have you guys subscribe, comment, grow with us, and I will see y'all on the next video.